Okay, so welcome everyone to
Mhm.
our webinar for today. I am Peggy West. I'm the organizer of the event, and we're going to get started here following the introduction of our sponsors. But I first would like to speak just a little bit about housekeeping. I always get a lot of calls, a lot of emails from board members and property managers regarding when am I going to get my credit? So if you please be patient and give all the speakers, even today going forward, at least 10 days to post your credit because DBPR has to do their part and then check, around 10 days. So please wait. Board members, this is not a class that you would get a credit for that's required by the state of Florida. But we're so glad that you're attending with us today. So that's housekeeping. The other thing is to be sure and put your questions into the Q&A box, not the chat box, Q&A box. And I'm going to try to watch it and I'll mention this again a couple of times, but that's about it. Following the webinar, I will be sending out a sponsor sheet. So everybody that sponsored today that invited you, I'm going to be sending out their contact information. So let's get started. This class is on safety and SIRS, the reserve studies, and this is going to be about reserves to the rescue. So let's get started. First, I want to introduce Vinteum software. We have Laura Magalon on. Would you please introduce yourself, Laura, and tell us about Vinteum and what you're doing for those websites?
Thank you very much, Peggy. Hi, everyone. My name is Laura. I'm the sales executive here at Vinteum. So we actually provide platform and basically services for residential management. What do I mean with that? So if you guys as a community or maybe as a property management company or as a property manager are looking to implement a website and a residence platform for that community that you're working with, we are here to help. We will build a website for you, so none of you guys would have to do it. We will actually also provide training to you, your team, the board, the residents on how to navigate our platform, how to use the features that we have within our platform, like service requests or e-voting as well, which is really popular right now in Florida. If you guys are looking for those type of services, go ahead and reach us. We're going to send you a message and our information here through the chat. And I'll be more than happy to help you all with any type of questions you guys have in regards to website or the platform, e-voting, Zoom recordings, and everything that you need in order to be compliant to the new Florida House bill. Thank you.
Okay, awesome. Thank you, Laura. Best website designers that I know of. So if you need a new website, it's a law now. Be sure and reach out to them for at least a bid. Next, I want to introduce Bob Aleka, Vice President of Community Services for Faster IO. He can't be on today. He had another commitment, but if you need something to do with anything on streaming, he's got some great features. You can take Faster IO with you even when you go home if you're a snowbird. So moving into the next one, I want to introduce Daniel Baum. He's the CEO and founder of COA Solutions. Daniel, tell us about yourself and your company.
Thanks, Peggy. Hi, everyone. Welcome to the webinar today. My name is Daniel Baum. I am the CEO and founder of COA Solutions of Florida. I specialize in commercial property and casualty insurance. I like to say my job is to help you find the least expensive I'm sorry I'm traveling today, so I'm going to keep it
Okay, great. So welcome, Tom. He's with APB Security, new sponsor for our webinars. Tom, tell us about yourself and what do you guys do?
You're on mute.
Tom, you're muted.
Can you hear me now?
Yes.
Yes.
Okay, go ahead.
Okay. Thank you for having me. It's my first time with this group, and I know everybody's cold, so it's a good day to be here. We're APB, American Protection Bureau. We've been around for over 20 years. We work in the Tri-County area. We have great customer base. Some of those people have been with us over 5, 8 years. We have a good reputation. We do all types of security. We do gates, we do banks, we do hospitals, schools, you name it, we do it. Arm and unarmed, uniformed security guards. The management background is military and police, so we're very familiar with what's going on. Right now, people, as you well know, security is a very critical part of your everyday situation. Is people are tense and reactions are kind of funny. We, as a boutique security company, we like to do a blend of security, economy, and efficiency. You have to look at the security as a partner in the whole daily thing. It's just that's the only way it can really work. And we do a great job of finding the right security personnel to the right account. That's very, very important. The pool of people that everybody pulls from is no different than anybody else. It's the management. How you train them, how do you guide them, how do you react to the situation, how quickly we respond to your needs. That's key for everything. Please keep us in mind whenever you need security for any reason. APB, American Protection Bureau, Tom Acosta, thank you very much for having me.
Thanks, Tom, and welcome to the group. Next, I want to introduce Hafer CPA firm. Nicole is right in the thrust of all of these taxes and audits right now. It's season. Hafer has 4 offices around the state, West Palm Beach, Miami, Naples, and Orlando. So they will also be on the sponsor sheet. Let's see. Next, I want to jump over to, let's see who's next. I lost my screen there. Sorry about that. Best Roofing. Anyone on from Best Roofing? Okay. Best Roofing is pretty well known, mainly in South Florida, but they also have an office in Orlando, and they're expanding to the West Coast, Southwest Coast, I should say. Again, please keep it in mind for a bid. Next, we have Deneen on with First Citizens Bank. Deneen, tell us about yourself and what are you doing for the company?
Thank you. Yes, Deneen Barham. I am the Regional Sales Officer and Community Association Banking at First Citizens Bank. I cover West Central and the Central Florida corridor. My counterpart, Jamie Galfand, who is our Regional Sales Officer in South Florida, is unable to attend today's webinar. So a little bit about First Citizens Bank. We're a 4th generation run financial institution. We have been around for 128 years, so we're pretty old. And we're a top 20 bank headquartered in Raleigh, North Carolina. In our division, Community Association Banking, we work specifically with property management companies in large self-managed associations. We provide lockbox, we provide loans, FDIC coverage for over 250,000. What makes us a little bit different, it's the people, it's our process, it's our technology components that we lend to that management company and the self-managed association. So please keep us in mind if your association is in need of a loan for repairs or improvements. It's, poignant today with the topic. And we can provide you guidance on our quick term loan up to $3 million, which is 5, 7, or 10 years. And then we also have our standard loan product, 15 years up to 24 months interest. So thank you very much for having this webinar and letting me spend a little time with you today.
Thank you so much for filling in. All right, next I want to introduce Southwest Elevators. I know it has Brooke on the picture, but that's not Brooke. Who's on?
I'm Brandy Cavender with Southwest Elevator. I'm the account manager for Broward and Naples. But a little bit about Southwest. We're a third generation family owned and operated union elevator company. I'm actually the fourth generation coming in. So long line of family business with Southwest. But we specialize in preventative maintenance, modernization, and repair. So really anything you need for your elevators. We service the entire state of Florida. We offer free surveys, second opinion. So really anything you need for any type of elevator, any age of elevator equipment, we'd love to be a resource for you. I'll put some information in the chat and feel free to reach out.
Thank you so much, Brandy, and thanks for filling in. Next, I want to introduce PD Concrete. PD, I don't think anyone's on. Is Dylan on by chance? No? Okay, they have their main office is in West Palm Beach, but they do have two offices. I think they have another one down in the Miami area, and they've been around for over 20 years as well. And they do an awesome job. So find them on the sponsorship as well. Okay, next we have City Quiet Windows and Doors. Is Ben on? Anybody from City Quiet? Okay, they will be on the sponsor sheet. Look for Ben Friedman if you need a proposal. Next, we have Clarkson and Varick. They're elevator consultants. Is Damaris on? Okay. They are based out of the West Palm Beach office for Florida, but they are national. So if anyone needs consulting for your elevator, I know this is a big thing with the condominiums, please reach out to Damaris. Next, we have the Paving Lady, longtime sponsor. They are expanding into the Orlando area as well as Southeast Florida. So anyone need any services for your paving, any bids? I know it's a great time to take bids. I know you need 3 bids, so reach out to Dawn Miller. Next, I wanted to introduce United Professional Engineering. They have an appointment today for a proposal. They are also not on, but they are based out of West Palm Beach, expanding over to the Naples area as well. Outstanding president there. He is the current president for the state of Florida Structural Engineering Association and was selected by the governor when we had the Surfside incident to write up the inspection report. Next, we have Munyon Contractors. Shelley, you want to introduce yourself and the company?
Thank you, Peggy. Thank you very much for having me. I'm Shelley Rovner, the project manager, marketing and event coordinator for Munyon Restoration, Waterproofing, and Painting. We have been in business 75 years. We specialize in high-rise condo HOA, and we also do electrostatic painting, which is on all metal surfaces. That's a fantastic tool to have. If anybody is looking for a quote in any of those above, please let me know and we'll be happy to get that for you. Thank you so much. Thanks again, Peggy.
Awesome. Okay, great. And next, we're going to introduce Velocity Services Group. This is a large loss restoration company that also does rebuilding. So they have a general contractor's license as well. Rick Hogan is the contact for that on the sponsor sheet. Next, we have Kaiser Air Conditioning. Paulo Weston is the president of that company. They've been around for a long time. I think Paulo purchased the company a couple of years ago, so they're making some changes and improvements. If you need help with that, and especially in the West Palm Beach area, primarily that's his big area. He has over 100 trucks in service, so he should be able to get out to you. And their big thing is they're available 24/7, 365 days a year. So in an emergency, that'd be a great company to reach out to. And then I want to also introduce Ricardo Gallian. Ricardo, are you on for the pool scientists?
Yeah. Thank you, Peggy. Good morning, everyone. We are a pool solutions company. That's the pool scientist. So we were super lucky to meet with Peggy and explain what we do. We really do a pool solution services, like not only a pool guy just with a flip flop and short just cleaning a pool. We do really a research-based service where we analyze water chemistry. We do pool inspection diagnostics. We do education for everybody because according to the Florida law, everybody involved in the pool process should have a CPO FO class, which are a branded certification. So we provide those classes as well. But the most important is we help HOAs, condos, multifamilies, all these kind of communities to improve their water quality, pool process based on research. We do service as well, but we work more like in automation. What we are doing is something like adding chemicals to the pool. Those topics then pretty much like people rely on pool professionals. We concentrate on developing a full conceptual model for each condominium, HOA, multifamily, anything, because every pool is different. So please reach out to me. I will put all my information in the chat, and we are super excited to share all our advantage on this market. Thank you, Peggy. Thank you, everybody.
You're welcome. Absolutely. And good luck to you. Lastly, I'm going to mention I do have a new website, FloridaCondoVendorsForYou.com. It will be on the sponsor sheet. If you're looking for some other sources for vendors, it is in the early stages of getting some more vendors on, but reach out there. And I also got a commitment yesterday from a management company. Any property managers looking for work, possibly the HR department can help you there. With that, I'm going to turn this over to our presenter for today, Matt Kuisle. He's with Reserve Advisors. And also we have one panelist, may be able to stay on for a short time, Jane Bolin, our attorney. So Matt, would you start by introducing yourself and your company?
Sure, absolutely. Yeah, Matt with Reserve Advisors. Last name is Kuisle. I've been doing reserve studies for about 26 years. This will be my 26th year. Reserve Advisors has been around for 35 years now, and we cover 50 states and 30 countries. But my focus is Florida. Work with about 3,000 associations here in the state, and I've been very involved with the law ever since the tragedy in Surfside, and that's what we're going to talk about a lot today is the new law on the SIRS, Structural Integrity Reserve Study, which you'll hear the word SIRS a bunch of times. Some people say SIRS, but I'm a SIRS guy, but nonetheless, I want to introduce Jane. I know that she's got a kind of emergency that came up, but I want to give her a chance to at least say hello.
Thanks, Matt. I super appreciate it. So, thank you all for being on this course. I just wanted to, I saw one of the questions that just came up. So, Matt, this is Matt's Reserve Advisor course, and it is got CEU credits for CAMs. Is that correct, Matt? I just want to confirm. So, folks, this is not the 1 hour legal update for condominiums, nor is it one of the 4 hours extra beyond board certification for HOAs. So if you're on and that's what you're looking for, I just want to make sure it's really clear. So again, my name is Jane Bolin. I am the owner and founder of PeytonBolin. We are a real estate and community association law firm. I love being on Peggy's webinars. It's great that I was invited to be just a panelist this time because these are Matt's slides and the course is excellent. And I was asked to come so I could not give legal advice because I don't give legal advice on webinars, but to help support with any legal questions that may arise. Unfortunately, I'm in the middle of a client emergency, so I jumped on, and it's not often that this happens, but I cannot stay on for the full event. So Kaylin from my team is here. She's going to be listening. Vinteum does an amazing job getting those questions. So any questions that are legal in nature are going to be sent to me, and I'm going to review them tonight, give answers in writing, and then that will be sent out with a copy of the slides, I believe, at the end. Peggy, is that correct? Awesome. So just want to make sure everybody knows that, and I apologize I can't be here for the entire event, but the slides are great. Matt's an excellent presenter, and the course is full of very clear legal information in terms of structural integrity reserve studies, and I'm also a SIRS person, not a SIRS person, so I go with SIRS. Matt, back to you.
Thank you so much, Jane. And I had the pleasure of spending some time in Tallahassee with Jane earlier this late last year, I guess it was, during the committee weeks. And so we're very involved and appreciate your input to the lawmakers and relationships that you have with those lawmakers that really do listen to the experience from all of your working with community associations and ours. And I think it's going to be we're hopefully going to get some more successful outcomes this year as well with regard to some of that legislation. But I'm sure we'll do a legal update at another panel. This will not be the legal update. And I have, a lot of what I have is just kind of quoting from the statutes and experience from working with the division, working with different attorneys and accountants throughout the state. And so while it's not necessarily legal advice, it is best practices and things that, because I'm not an attorney either, but best practices that we've learned as reserve specialists and professional engineers. So I'm going to go ahead and share my slides and we can jump right in here. As Peggy mentioned, please do put the questions in the Q&A so we can address them there. Once we answer them, then everyone can see them. But this course is, again, 1 hour for insurance and financial management. There's me. We're going to talk about some of the 913 was the big law last year. Some people called it Condo 4.0. The SIRS was created in 2002 from a bill called Senate Bill 4D, but that doesn't matter anymore. It was 4 years of changes, so there's been multiple versions of the law that have gone through. I've got my little copy of 913 right here in front of me that I've been using. Just a little piece of legislation, 191 odd pages. And again, the legislative session just started 2 weeks ago now. We're in week just started week 3, and it goes 60 days. So we're going to keep keeping an eye on any other changes here. But this course is going to be focused on what has changed and what is actually law now, as opposed to what the bills are. We're going to talk about reporting requirements and disclosures, as that's very important now. Incorporating SIRS into budgets, I think that's where a lot of the questions that we get. We're just kind of coming off of budget season for most of us, but looking forward to other questions and shedding some light on how we incorporate that into budgets, and what we do if we want to waive partial fund, what restrictions are there. We're going to talk about the funding, different funding strategies that associations are using, as well as what's considered a completion of a SIRS. So what is a SIRS? Well, it's a reserve study focused on a few items, and it's the Florida lawmakers' reaction to the tragedy I mentioned earlier, the tragic collapse of the Champlain Tower South building, June 24th, 2021. Unfortunately, 98 people died in the middle of the night due to a collapse. The official investigation is still ongoing by the National Institute of Safety and Technology. Their initial findings indicated that the collapse likely originated in the pool deck. The collapse didn't, but there's still the final investigation is still ongoing. It's likely going to be a combination of different factors, from initial construction, perhaps initial design, and also the maintenance and wear and tear and modifications that were made to the building over the years that likely all contributed into that tragic situation that we want to make sure, and we're very hopeful we'll never see anything quite like that again. But the reality is there were a lot of buildings that were in pretty poor shape. The milestone inspection, which we're not going to talk about too much today, but there was over 24 buildings that were essentially evacuated and were considered inoccupiable by the local building departments because of safety concerns that were found. And so outside of Broward and Dade County, Miami-Dade counties, there was not a statewide requirement to do any inspections of the buildings, which is kind of crazy if you think about how many inspections and reviews a drawing goes through, and as you go through construction, all the different permitting and everything that happens as the building gets built. And then it gets built and it gets certificate of occupancy, it's turned over to the owner. And unless that changes hands, or the ownership changes hands, or there's some other reason one of the owners decides to get an inspection, there's no requirement to have any eyes laid on that building again. And in our extreme environment in Florida, as buildings reach 60, 70, 80, 100 years old, it's kind of scary to think what can happen to those buildings if we don't have an inspection program. So this was a reaction, probably a first step, I would say, into inspection programs for structural buildings. Why condos? That's the question we get. Why just condos? Were searched out. We asked the lawmakers that question as well, because these same issues could surface in a office building or a commercial building or a hotel, but the reality is, it hasn't surfaced in those areas, and generally those areas have a little bit of a different financing structure, and so that's probably what's most unique about condominiums, is that we have to have everyone in the condominium pitch in their certain monthly or annual amounts or quarterly amounts, and that's how we get money to do our projects. The fact is, as buildings age and infrastructure ages, it's going to require maintenance. That maintenance costs money, and if the money's not there or available to do it, the maintenance gets deferred. And unfortunately, many boards did not have the funds, or don't have the funds still probably, to take care of those items that were inevitably going to happen. Whether the law changed or not, there's going to be a shortfall in costs. Prior to the collapse and prior to there's kind of their closer look at the requirements of a majority of a quorum at a condominium meeting could waive reserves in their entirety. So a quorum sometimes is a smaller portion of the overall number of units. So let's say you have 100 units in the building, maybe the quorum is only 20%. So if you get 20 units there at the meeting in person or by proxy and 11 of them voted, you'd have more than the majority of a quorum that voted to waive the reserves. And so, essentially 11 people in that case could waive reserve funding for all 100 units in the building, which everyone felt was a pretty low threshold. So in the first iteration of the law, and it still stands today, is that now any waiver of reserves for associations, whether they're SIRS associations or not, any waiver now requires a majority of the voting interests as opposed to just a majority of the quorum attending at a specific meeting. So a higher threshold, because and it was very common, especially in certain parts of the state, which will remain nameless, that the waivers were very, very common, and they would take place year after year after year, which created again a situation where boards were left with obligations to repair and replace buildings, but no funds to do so. And so the lawmakers felt that they had to step in and make that change. And then there was also, especially on the Florida House, there was this major concern that they saw, not just at Champlain, but it was an example at Champlain Towers where they had spent a lot of money on a beautiful lobby. They had a very nice recent lobby renovation, millions of dollars on the lobby, but clearly had structural issues that they knew about that they did not spend money on. And so the lawmakers said, we got to stop associations. They felt this was a widespread issue of associations spending their savings that were intended for reserve items, or intended for safety items, spending it on cosmetic items is what they call it, or aesthetics of the building. So they wanted to create some controls and say we got to make sure that the safety items get spent on safety, the safety reserves get spent on safety items, and the aesthetic items are separated from that. Peggy, you had your hand up.
Yes, I did. I just want to be clear. So it's 51% of the shareholders or the owners for the approval.
Yeah, so to waive, and this will come in maybe a little bit later, but to waive any reserving now, first of all, they won't be able to waive any SIRS reserves, but to waive other reserves, so non-structural reserves, or if they're in a building that's, say, 2 stories that doesn't have to have a SIRS study, any waiver of those reserves would require a majority of the total voting interests, is how it's worded in the statute.
Thank you.
Should clarify too, for those that are joining us from HOAs, this course is really hyper-focused in on structural integrity reserve studies, which only apply to condominium associations and cooperatives. So 718, 719, this applies. 720, this does not apply to you. Just want to be clear on that too. So what's considered in the structural integrity reserve study? Well, the roof, and this list evolved a few times. It didn't change. I did change a little bit last time. I don't anticipate any major changes going forward, but right now it stands for roof. The structure has to be included, including load-bearing walls and primary structural members and primary structural systems, fireproofing, fire protection systems, plumbing, electrical systems, waterproofing, exterior painting, and windows and exterior doors. That's the list. I wanted to show, we go back. This picture in the lower right-hand corner is a pretty common issue that we would see in garages. I can't tell you how many garages I've seen that have elaborate kind of gutter systems on the ceiling that are capturing water that are leaking through the ceiling of the garage. They put the gutter system so that those salts and things that drip down don't damage the vehicles below. But essentially what this is a roof leak, and the roof being the plaza deck above the garage, often covered in pavers or where the swimming pool or landscaping is. And so they want to make sure. That was one thing that just continually got overlooked a lot was waterproofing. So there's a waterproof membrane below the brick that you can't see from the top of the pool deck, but above the garage concrete there, that acts as a roof, and over time, just like all roofs, that's going to develop issues and become brittle and likely fail at some point. So when you see little either white staining or chalking on your ceiling of your garage, or you see water coming through, in this case even had little like stalactites hanging from the top of the garage, those are salt efflorescence coming from through the concrete. That's a sign that that membrane has failed. And so even though things are sometimes out of sight, the structure itself, we're not likely going to replace the whole structure, hopefully. There are different components of the building that should be included, and they wanted to expand this list to make sure it was more inclusive than the prior list, which was always just said roofing, painting, paving, and anything else over $10,000. Well, everything on this list would fall into that, everything else over $10,000, but because it wasn't called out specifically, many people were overlooking things like plumbing, the fire alarm systems, and these membranes, the closet deck or podium deck membranes that I'm showing here in this picture that failed. And then the last component, they put a little bit of a catch-all and said any other item also is included as structural, that if the item has deferred maintenance expense that exceeds $25,000 and the failure to replace or maintain that item negatively affects the items listed above, as determined by the Structural Integrity Reserve Study. So the best case example of this is the seawall. So seawall wasn't listed on that prior page, but if we don't maintain the seawall and it's close to the building, is there a chance that it could damage the structure of the building? And that would be up to the professional providing the reserve study to determine if that seawall should be considered structural or not. And it really has to me, it's really about the proximity to the foundation or other components of the building to determine whether that could be constructural or not. So you could argue this one could be, but if it was, maybe on the other side of the parking lot, may not be considered structural. So that, the retaining walls, swimming pools, if it's on the ground away from the building, likely doesn't fall into that category. If it's, again, above the garage or part of the roof system, it's going to be inherent in the structure, and it's going to be part of the structural components. The $25,000 amount was increased. It was initially $10,000. I mentioned in the regular statute as well, roofing, painting, paving, and anything over $10,000. That number was first put in there in 1984. So the equivalent of $10,000 today of $1984 would be actually $25,000. In fact, they just increased this week, so they're going to adjust each year, come out with inflation. The number for 2026 is actually now $25,675, I believe. You can go on the DBPR's website to see it. And all that says is that if an item is above that amount, it must be included in your reserve schedule. If this seawall was, and it wouldn't be just looking at the seawall, but let's just say it's a very small section of seawall that's impacted here, and it was less than $25,000, it would not be, or now as of 2026, less than $25,675, it would not have to be considered a structural component. So we did about 1,000. Well, we studied about the first 1,000 structural integrity reserve studies that we did throughout the state, and we found that about 2/3 of the items were in a community were structural, and there's about another third of the overall expenditures that are not structural. And I think it's important we were able to convince vast majority of our customers to look at both sides of the equation, because there's still some pretty big items that are not included in your structural integrity reserve study. So if you just looked at SIRS items, you're going to catch on average about 2/3 of the components, but you probably won't see in there the elevators, and which are very critical parts of the building. Some would argue they're a life safety component in certain high-rise buildings, which I wouldn't necessarily disagree with. Same with air conditioning, especially in the Florida heat. If we don't have air conditioning, we're going to have some issues. But nonetheless, I don't think those meet the definition of structural as the statute has it written currently. So things like pavement, carports, any items on buildings that are less than 3 habitable stories. So if your clubhouse, excuse me, if your clubhouse is only 2 stories, those components, may not be part of it. If you have townhomes, say you have it, and we have a lot of buildings where we have a high-rise building, but then on the first or on the street level, there might be several townhomes. If those townhomes are not 3 habitable stories, the roofs and the waterproofing and the fire alarm systems, et cetera, for those components may not be considered structural, so they might be considered non-structural. So quite a bit of elements, still key to the operation of the community. Not all of this is aesthetic. Some of it is aesthetic, certainly, but all of it is key to the the board's role, which is protecting the value of the community units of the homes, and not having lighting or having inadequate awnings that are in very poor shape will detract from the overall community. So while they're aesthetic, then the lawmakers felt they're not as critical. It's important to continue to look at those. And again, these funds still have to be, if they're over, and now they raise that threshold as well, if they're over $25,000, they have to be disclosed as a part of the budget, but they can still be waived. For the non-structural only, can still be waived by a majority of the voting interest voting at a duly called meeting of the membership. So who needs the SIRS? It's, again, I think I mentioned this, 3 habitable stories or higher, residential condominiums, and single family, 2-family, 3-family, or 4-family dwellings with 3 or fewer habitable stories above ground are excluded. So you could have a 4-story building with 3 habitable floors and 4 families in it, which is a pretty good sized building, would be about the largest building that you could have, but still fall under that first bullet. That would be excluded from having to do a SIRS for that building. Now, if it was a 5-unit building, then it would have to be included. If it was 4 habitable stories and 4 families, then that would be still included. Any portion of the building that's not part of the condominium ownership. So we have a lot of mixed use buildings where there might be a commercial units or mixed, hotel portion of the building. Those portions would not be required to have a SIRS. So the SIRS must include the items, remaining useful life, and replacement cost or deferred expense of each item. It may exclude items with indeterminate life or a great life greater than 25 years. So we talked about the structure. The initial version of this law had something written on there that said the foundation and the floors have to be included. The intent is not to replace entire structures if we don't have to. And so kind of the first reiteration of this law, they came in and said, no, anything that has a remaining useful life greater than 25 years does not have to be considered. So if the structure is going to last more than 25 years, it doesn't have to be considered. However, most of us reserve specialists and engineers will know that we don't want to let the structure go untouched with no repairs for 25 years. So we likely will put some deferred maintenance expenses for, say, concrete restoration. Again, waterproofing would be something that would be done more frequently than 25 years. But even things like that seawall, if we did put it in there, we might say, well, we don't need to fully replace the seawall if it's relatively new in the next 25 years. We may want to allow for some funds to, say, reinforce the cap or conduct some partial repairs or at least an inspection of that wall. So that's typically how we approach those things. It doesn't have to be a total replacement, but sometimes it's more of a repair that's included for that at a regular interval and a regular cost. I'll just continue jumping in here, and I know I want to I'll pause for questions maybe after this slide. And Peggy, please jump in if you see others. And I was going to take a look at them as well, but I don't have them up right now. There we go. Who can do the studies? So initially this was just a professional engineer or a licensed architect. When they first put that out, we were also dealing with milestone inspections at the same time by those same 2 folks. There weren't a lot of engineers and architects doing reserve studies at that time. And so they opened up the requirement to include people that were doing reserve studies, including the reserve specialists and professional reserve analysts, which are 2 industry designations for people that are qualified to conduct reserve studies. There were some reports then after we started doing these SIRS of companies that were making the SIRS recommendations, but also then bidding on the work that they were recommending, mandatory funding for. And this impacted a few of the lawmakers and their families where they felt like that recommendations were given that may not have been in the best interest of the association, but had a little bit of a conflict of interest because of the company or the relationship of the company to a, say, contractor or waterproofing company, etc. And so they want to make sure that you're disclosing in any contract for the SIRS where the company doing the SIRS is planning to bid on the work in the SIRS, that has to be disclosed upfront on the bid for the structural integrity reserve study. So we want to keep, and I would just say it's hard enough to be, if you're a board member, it's hard enough to be a board member. It doesn't pay very well. We all know that. It doesn't pay anything. And to potentially open up even claims or a perception that there's a conflict of interest is just going to make it harder for people to accept the findings of the structural integrity reserve study. So I'm always recommending, keep an arm's length between the folks doing the work and the folks doing the reserve study that are planning the work. It's always nice to have independent opinions when it comes to that. And then when must it be done? Well, those deadlines have essentially all passed, except for buildings that were existing after July 1st, 2022. So those newer buildings that have built since then, they have to do it at turnover and then every 10 years thereafter. They did allow, if your milestone was due by the end of this year, you could defer the SIRS to coordinate with a milestone inspection. And then just this past year in 913, that big piece of legislation that I held up earlier, they added that association may delay conducting the SIRS for no more than 2 consecutive years immediately following the milestone inspection. So if they do them, so one of the things that the lawmakers and their staff heard from constituents was, we're feeling that we're kind of feeling like we're getting kind of double whammy, double hit by these laws because we're older, we've never reserved, for example, maybe, and we did the milestone inspection. We've got all these repairs from the milestone inspection that we have to do to catch up for what had happened in the past, and we also have to start funding our reserves in full, which we've never done. So it was really a dramatic departure from what they had historically done. So the lawmakers wanted to provide some relief to this, and essentially what they said in 913 is, let's prioritize the milestone stuff. If you do milestone stuff, you can get a slight break on conducting the SIRS and even funding the SIRS, which we'll see on another slide. So with that, I'm gonna pause and just switch gears a little bit over to questions. So Marcia asked, does HB 913 requirement for 51% unit owner approval of special assessments loans and equity funding apply to funding for SIRS only or to all those for other reasons? So it would be for everything. So majority of the voting interests are required to fund reserves, and I think this is funding and other means other than regular assessments. If you're doing regular assessments, you do not need to get owner approval. There is a situation now where there's some interpretations now that says anytime you do a special assessment for a structural integrity item, even though that might not have been required in the past, or get a loan for that work, then that does require owner approval. I don't believe this would apply to so that particular piece of it would apply to non-structural items. So let's say you wanted to get a loan to redo your parking lot. That's not a SIRS item. I don't think that statute applies there, but that might be a good question for us to get Jane's opinion on there as well. Go ahead, Peggy.
If the work isn't done, would insurance companies cancel the policies on the buildings?
So that's a great question. Yes, and I don't know if Daniel's still on either, but the carriers are asking to see these reports, both the milestone and the structural integrity reserve study, now that they know they're available, because essentially they want to do their homework to see what they're getting, who they're getting into business with, and what the condition of the associations are. And certainly, yes, there can be issues if the report says you need significant work and the work is not commenced on time. That's going to cause issues from the building department, because the milestone likely is going to require that. There's a requirement to commence the work within 365 days, but also the insurance company is going to have a harder time insuring, and they put in the statute, if you didn't do these reports, you're willfully and knowingly not doing it, you're breaching your fiduciary duty. And I think it's going to be hard for communities to get a directors and officers policy that's made that decision. So yeah, the industry is starting to catch up with this, and they're going to use this against associations when they can, I think. But I also think, on the other hand, if you've got this done and you're in very good shape, tape, I would show that to your insurance carrier. Your insurance agent should know that you passed your milestone inspection and that your reserves are, on track, let's say. And I think I'd want everyone to know that about my community if it was a good story to tell. Good question. The next item from Nancy asks, are the items noted in the SIRS for expenditures for, let's say, 2026 required to be completed? Example, the board thinks the paint can go another year. Are they required to complete the year it is scheduled, or can they defer that maintenance another year while maintaining funds for the expense? I would say the latter, in my opinion. There's nothing that says you have to spend the exact money on the date and at the dollar amount that is shown. However, Nancy, if your board is also wanting to reduce the funding that's going in the budget each year or adjusting the budget from the SIRS, that is going to be a no-no. That would require an updated, or that's going to trigger the need for an updated structural integrity reserve study. So as long as they continue to budget the amounts that's shown in the SIRS, even if the expenses are going to be off a bit, I think they're okay. The SIRS does not, if the SIRS says a railing needs to be replaced in 2028 and you get to 2028 and the railings are all in great shape and then don't need to replace them, I would not just blindly spend the money on that. I would likely go back and want to get an updated SIRS, or just simply continue to fund as the prior SIRS showed and make the expense when it comes up. I think there's a bit of a gray area here. The SIRS is required every 10 years, as you're seeing on this slide. But so much can change in 10 years. And as good as we like to think we are at estimating useful lives and costs, we're not going to get it right 10 years from now what exactly that paint is going to cost, or whether it's going to last exactly that year or not. So best practice is to update these things much more frequently than that. Average industry practice was always to do it every 3 years. Although now with mandatory funding, I'm seeing more and more communities just doing an updated SIRS every year to account for the report matching the situation, Nancy, where the paint gets deferred and the budget can be adjusted accordingly. Peggy, you want to jump in on that?
I just want everyone to know that you, Matt, are a licensed professional engineer. And I think that's very, very important for the information that you're disseminating today on your slides. So if anybody has a question regarding that,
yeah.
Matt is also an engineer. That's it.
Thank you. Yes. And I think that's a good point. And it kind of makes me think too of when the board sometimes thinks painting can go another year. This is maybe me getting on my engineer soapbox. They may not understand the implications of all that, because the paint may look good on the surface, but it may, it is likely porous, and it may not be as water, the waterproofing properties of that paint may no longer be keeping water out of the building like it should, and water is our biggest nemesis for structures. And so I would only make those deferred, and you'll see in our reports we kind of say, this is a project you only want to defer at the advice of an engineer. Shouldn't be made a decision on their own for something like roofing or painting, or really any of these structural items. For the lobby renovation, fine. I don't think they need don't need to consult anyone on that. That's an aesthetic issue. But when it comes to something that could potentially cost more, if it's not done well or not done in a timely manner, I would be hesitant for a board to make that decision on their own. So just use good business judgment. Business judgment rule always applies here. But part of that too is relying on your professional to say, this is a project. And I'm not saying that the paint can't be deferred. I'm just saying make sure that you're confident and you're getting that advice from good, reliable, credible sources, as opposed to someone that's just hoping to keep the fees a little bit lower on their monthly assessments, or have as maybe an ulterior motive, I guess I'll say in there. So I'll get off my soapbox now and switch over to Stacy's question. Windows were historically the owner's responsibility, and the common area windows were all the COA handled. Can that still be done? So also, as SIRS done, was told the exterior doors were not over 10K individually, so they were not necessarily in the study, as they could be replaced individually. Interesting. So that's going to probably lead me to, I think, my next slide here. No, it's a couple slides up. So I'll answer that now. Yeah, I'll answer that now. We'll just kind of skim over it when we get to the slide. So, Stacy, the windows and doors that they put in the study, and that was kind of the one initially, it was just windows. It is only for common area windows and doors, so it does not preclude the declaration and say now all windows and all condos are required to be the association's responsibility. It's not the case. So they clarified that in a subsequent statute. So that's right. It's only the common area windows. And not all of the windows, in some declarations, all the windows are common area and they're considered a common element. But I would say most, at least 80%, the cases that I see, the windows are the unit owner's responsibility. Just like the plumbing in the unit is the unit owner's responsibility. So those unit owner maintained items are not subject to the SIRS requirements. You don't have to fund maintenance for those items that are not the association's responsibility. As to the other item, the second part of your question is, had a SIRS done, but was told the exterior doors were not over 10,000 individually. Well, they were not necessarily in the study, as they could be replaced individually. Historically, this was a reasonable approach. The statute said, roofing, painting, paving, and anything else over $10,000, and then they gave the example. But if you had a case like this where each door was less than $10,000, you could replace them individually, and it would not have to be an item in your reserves. And I think that still applies. But now that exterior doors are listed as items, and I'm going to go back to I won't go back to the slide. I'll have to refer you back to the statute that lists the items. Says you must have reserves for all of these items, including exterior doors, waterproofing, roofing, etc. And then it says and any other item over $25,000 currently. So if this was not a door but a seawall, then that would apply as we used before. But because it's a door and that's called out specifically, my interpretation is that anything on that list, regardless of cost, has to be included, even if it's less than $25,000 or $10,000 individually. Great questions. Wow. Because of thought about this, you can tell. So thank you for those questions. Do pool decks also apply to this, Lisa? Yes, I believe the answer is yes. I do not see, Becky says, I do not see how elevators are considered non-SIRS required, question mark. I think that I just don't see anywhere on the list where they're called out, and that's how we came to that determination, Becky. But certainly, if your comment there is that you think the lawmakers should include them as SIRS required items, then certainly reach out to your lawmakers to make that change. They're the ones that wrote the law. And Jack asked, are elevators included in the mandatory reserves? So not in the SIRS reserves, which I think you're referring to. The mandatory reserves, all reserves for condos are mandatory. You must reserve for roofing, painting, paving, and anything else over $25,000. Those are mandatory items. So elevators fall into that, but they can be waived. The funding for them can be waived. So if you're a board member, again, this is not a board decision of whether or not you show the elevators in your reserves. The board is going to be obligated to show their elevators in their reserves. They should not be in the structural reserve, in my opinion. But the owners then could vote to waive funding for the elevators. Okay, and I'm gonna just kind of switch back and forth. I love the questions. I think it kind of keeps things moving, and so keep them coming. I'm just going to take a little pause from the questions and go back over to the slides, and then we'll come back to more questions in a little bit. I want to talk a little bit about reporting requirements, and this has changed quite a bit as well, but within 45 days of receiving the SIRS, you as an association are responsible to distribute a copy to each unit owner. Now you can send them a notice, and most will do like a little postcard, or if they've subscribed to electronic, just an email that says, hey, the SIRS is done, and here's a link where to find it, or here's a link to it, or awareness that it's done, notify that it's completed. Similarly, the division must receive a notice that it was completed and provided to each owner, either physically or electronically. This year, last year, I guess now, House Bill 913 included that an officer or director must also sign an affidavit acknowledging receipt of the completed SIRS. And so that's new. And so that's something that you keep on file. I know the state is working on a standard template. If you need an affidavit, I have a template. I'm sure Jane could give you a template as well. It's kind of a simple document, just swearing that you did the SIRS and it was completed and given to the membership so that you have that for your association records. There's no need to post that online or give it to the state. That's just a record you keep as your association. The division also must include a list of the associations that have completed the SIRS. And so they've actually got a database, and I'm going to share with you, let's see, I'll share it here in the chat. There's a website, let's see, everyone, there we go. There's a website I want to share with you where these the reporting instructions are located. The database can be found on this website, as well as just a ton of great information about SIRS and milestone inspections, etc. So it's called condos.myfloridalicense.com. It's in your chat right now. Everyone should be able to see it. And if you click that or want to bookmark it, they are updating that as things change as well. You'll see the 913 changes were added there, and just a wealth of information there directly from the state. So I wanted to share that with you, and also we can show on the next slide. You're going to see the copy. Yeah, you see the page itself, the head page of that, as well as the instructions. So there's some instructions of how to report this to the division. These deadlines, again, have really already passed. So if you haven't done this yet, do it right away. There's instructions on how to create your portal page, as well as linking your association's management entity and reporting the reserve study. So they're going to ask you what type of profession completed the SIRS, what type of what's the license, what type of license, what's the license number, and the name of the company that completed the SIRS are all information that the state wants. There's a spot in this submission to attach a copy of your SIRS, and it's under the file attachment section. Just want to make it clear to everyone that is an optional field. You do not need to give the state a copy of your most recent structural integrity reserve study. I'm not sure why they're asking for it. I think they're just trying to get some samples. They can specifically, if there's an investigation, they can they can request a copy of that, but that field is optional, so don't feel the need to add that in there if you don't want to. A lot of reporting. And so here's the database. And again, this is, if you go to that condos link, you can, I think it's toward the bottom, you can see the database, viewing the SIRS reporting database is a link towards the bottom. And you can click on the database to see, anybody can click on the database and see which communities have submitted and which haven't. So again, back to your question earlier, Peggy, is the insurance company going to care? Yes. Is the mortgage company going to care? Yes. And they can easily go online and type in the name of your building and see it. This is just a screenshot of some buildings in Naples that have submitted their property. But if you're not on this list, that's going to probably be a red flag for those. The other red flag is likely going to be at the time of sale. When you go to sell units, the copies of the SIRS must be furnished to a potential buyer. The new condominium rider realtor forms have disclosures about the SIRS, and if the contract doesn't conform, it's more easily voidable. So again, mortgage companies are going to want to see this. They're going to make sure that you're complying with the SIRS. So if there happen to be any out there, and I'm sure there aren't, because the people that are on this call are the ones that are educating themselves and doing the right thing. But if you know someone that's not on this call, that's not done the SIRS, it could be more difficult to sell a unit in their building if they're not compliant with these laws. And of course, the state can fine, the division can issue citations and fine associations if they find out as well that you haven't done it. But they're not going to necessarily know until someone probably makes a complaint, which certainly could happen if a sale falls through because a board didn't do the right thing here.
Matt,
Peggy,
I wanted
please go
to
ahead.
interrupt you. I'm sorry.
No, it's great.
If you cannot get that information from your board, what do you do? Do you go to the association attorney? I mean, how can they get it? I've got a couple of people that have condos that they can't get the information.
Yeah. So
They've done
I
records
mean,
requests. Yeah.
yeah, you're attorney for not getting it. I mean, it's probably more of a last resort, but if you've made all those attempts to reach out to the management company, reach out to the board, you're not getting any responses. Right on the front page of this condos.myfloridalicense.com is how to file a complaint, and the division will investigate that for you. They have an ombudsman office too that can be a resource to try to help guide your issues and hopefully get you the information that you're expected to receive, that you should
Okay,
be
thanks.
receiving.
Sure.
Yeah. All right, so let's talk a little bit about getting into the funding and actually incorporating the SIRS into the budgets, because now this year, 2026, is really kind of the first year that folks really started to include all the SIRS requirements. They didn't have to be included on any budget adopted prior to December 31st of 2024. So a lot of people adopted their 2025 budgets before that date, so it didn't really impact 2025. But now in 2026, the amounts must be based on the findings of the most recent structural integrity reserve study. So I think this is one of the kind of the greater areas of confusion. If a study is 2 or 3 years old, maybe out of date. I think we already had a question on that. What if one of the expense times change? Do we still base it on the most recent SIRS? And I think the answer is yes. And basically the contributes at least on the most recent structural integrity reserve study. It does say associations can adjust for annually for inflation or changes or extension caused by deferred maintenance. But I'd just be cautious on how far a board is going to make adjustments on their own for those. I think it's a much better practice to ask your reserve provider to make those adjustments and reissue an updated structural integrity reserve study. It's not very expensive to do an update. We do a lot of updates without even revisiting the property, just rerunning the numbers based on expenses that have happened or a timing change that would impact sooner or later. So that's kind of what that requirement is now. In 2025, just last year, again, as an effort to show some relief to associations, there's a couple of changes made, and that's one of the big ones. Again, goes back to the milestone inspection, and if the association is funding repairs recommended by the milestone inspection, they can pause or partially reduce the reserve funding for I think for budgets adopted. I think it was for up to 2 consecutive budget years for budgets adopted on or before December 31st, 2028. So there's a time period here again where they're saying, go ahead, take care of the milestone work. You can vote to waive the reserve funding if for the purposes of funding repairs recommended by the milestone inspection. So this raised a question. We had a board that said, well, the milestone inspection, we passed phase 1, but it did say we had some caulking that was a little bit loose on one of the windows. So we had, we did a couple $100 worth of repairs on caulk. Does that mean we can pause all of our reserve funding? And I think you have to be, again, using good business judgment here. A few $100 repair is not certainly the intent here. If you had a $1 million repair and you're funding that, then I can see, partially funding the reserves or taking the reserves down for that. But if you were, if you were supposed to contribute $100,000 to reserves and you're just paid a little bit to do some repairs, I think I would still try to contribute that $100,000 or maybe at least the difference of what you paid for the repairs to the reserves still, because I don't think this should give, or the intent is to give carte blanche just to not reserve for small repairs that were done by the milestone inspection. But a lot of, again, the intent here is for places that have major catch up to do from milestone repairs, just to bring the building into safe situation. This year, they clarified that the funding plan can incorporate regular assessments, special assessments, loans, which we always have included those. Generally, the preference is regular assessments, but if a special assessment was needed or a loan was needed for an immediate near-term project, our firm has always incorporated those things into the reserve schedule and continue to do so. Now it's codified that we can do that. The part that is added this year, well, this was all added, but the part that we're still a little bit trying to kind of work our way through is the line of credit idea. Because they said now a funding plan can incorporate a line of credit. Again, if approved by a majority of the voting interests, the line of credit has to be immediately available for use by the board. So I think it also has to be approved by the bank. But that's an option that some associations have to kind of, I think, bridge the gap between funding their reserves at the full amount and kind of ramping up towards, or starting where they are, maybe not funding reserves at all, and ramping up towards funding to the full amount. Line of credit is not really a long-term solution, I don't think, to reserve funding, but we have had a few associations take that option, and then we can reflect that in our structural integrity reserve study. But recognizing that the line of credit, again, must be approved by the bank in advance, it must be approved by the unit owners. It must cover the line must cover the cumulative amount of any prior reserves that were waived. So it's a large amount that needs to be set aside. Banks are not all like lining up to do these lines of credits, because when they set aside the money for a line of credit, they have to set aside the reserves there, and they can't use that money for any other purposes. So there's some fees usually attached to these lines of credit. And then any pausing of funding or the variation using the line of credit that's not shown in the SIRS triggers the need to update the SIRS before you start funding again. Because just because you had a line of credit for a few years and didn't fund the reserves doesn't mean that the reserves are where they should be. Now you're probably a couple of years further behind on the line of credit, assuming you didn't draw on it to fund reserves. So I'm going to stop there because I'm sure we have some people getting into questions about lines of credit and loans and all of this. So I'm going to jump. Let's see. Jump around a little bit on this to get some of this financing stuff, or the funding piece of this. Yes, to someone who asked if we're going to get the slides, yes, I'm happy to send those out to Peggy I'll send them to you right after this program so you can share them with the info sheet and all the recording and everything that you send out afterwards. Thank you for that. But yes, if a condominium has the reserves, is there a law that requires it to use the reserves before using the loan money for structural requirements? I would say no. That's probably going to be more governed by your bank relationship. A lot of the banks want to see you maintain some level of reserves, so they'd rather you use the loan funding first. But depending on how much you have and how much you're financing, that's a case-by-case scenario. But no law that requires you to use the reserves first. Although I will say, if you have the reserves and you don't need to borrow the money, that's a better approach. You're going to save money on interest. But that's just my opinion on that one. Dominic, a new reserve study should be done about every 3 to 4 years, correct? Yeah, I think 3 years is kind of our industry standard. If a community doesn't have a lot going on, if the plan is proving true, they may go a little bit longer. I will say this: last year, with all the storms we had on the west coast of Florida in late 2024, in 2025, we did a ton of annual, so 1 year updates to account for those changes, because maybe the useful life of the roof got reset thanks to insurance proceeds that replaced the roof or something. So it really depends on what's going on in the community. The statute, again, as we said, for SIRS is every 10 years, but we just talked about 2 other triggers that might require an update sooner than every 10 years. And I do think 3 years is a good rule of thumb there, Dominic. Thanks for sharing that and for participating. And yes, you will also get a copy of the information. Oops, I just I think answered one that I didn't, moved one over that I didn't answer. Oh, may I have the contact information? Yes, you will get the contact information. All right.
We'll be sending out a sponsor sheet, and it's going to have all the sponsors and Matt and Jane's contact information at the very top.
Very good. Okay, here's another question that just came in anonymous about moving money from a pooled reserve to a SIRS budget to fund now while owners make their special assessment payment. So I think what's going on there is they're saying, can we take the pooled reserves that are not for SIRS? Those pooled reserves maybe are set aside for your elevators or your swimming pool or other things, and can we move that money to pay for a SIRS project while the owners make their special assessment payment for the SIRS project? I would say no. The funds can only be, unless those funds can be used for other purposes if approved in advance by a majority of the voting interest. So anonymous, it would take a voting I think it would take a vote to use that money that's in a pooled reserve for something else, to use it on a project that is not related to what its intended purpose would be. Okay. Let's keep going on the slides. The questions are kind of there's quite a few. We'll get to more of them here at the end, but they're not all pertaining. I'm not finding a lot pertaining to this loan and line of credit, which I thought there might be more, but that's good. We've talked about this a few times already. I guess here's the slide. We kind of preempted this when we were doing the questions, but majority voting interests required to waiver partially funding reserves for a budget adopted after December 31st. So any budgets adopted now, funding for SIRS items cannot be waived except for the milestone pause of the alternate funding sources. Those two that were added in 913 that require, again, majority of the total voting interests to approve. And then this, in quotes, is a disclaimer that has to be on any proxy related to waiving or partially funding reserves. And essentially, this waiving these reserves is going to result in unit owner liability for unanticipated special assessments. The costs don't go away. The projects don't go away. The roof doesn't care if you're funding it from regular assessments or special assessments or a loan. It's going to need to get done when it gets done. And so it's pay now or pay later for a lot of those things. And here's the statute in the slide that applies here and what's causing these restrictions of funds. It says, reserve funds can only be used for the authorized purpose unless their use is approved in advance by a majority vote of all the total voting interests of the association. And then again, budgets adopted after 2024, owners may not vote to use reserve funds for any other purpose. So that prior question was asking, can we use some other funds to fund our reserves while the owners are collecting a special assessment? That would be okay with the voting owners. Could never go the other way. So you could never take money out of the SIRS reserves to fund for any other project. Pooled reserves. Most of our associations are using pooled reserves now. I'd be interested, in our audience if people are using pooled or component, but component reserves are very common for many years. They were actually required prior to 2002 2002 for condominiums, but in 2002 the administrative code changed. This last year, you'll see the statute here was just added that codified this, not just in the administrative code, but in the statute as well, that reserve components may be pooled with other components in paragraph G. And the association can maintain pooled, and the vote members is not required to change the accounting method for reserves to a pooled accounting method or a straight line accounting method. So the accounting method can be done by a board motion. Benefit of pooling: generally more flexibility on repairs or replacements and lower annual funding requirements. Instead of keeping 20, 30, 40, or 100 different buckets of money full at all times with your component reserve, you just have to worry about one overall bucket of money. Now, that more flexibility is, people have always looked at that as a drawback or a concern that a next board is going to spend the money on something they shouldn't. But I think the new SIRS controls over structural components mitigate that to some extent. I think the other drawback when you have pooled reserves is by inherently by looking at pooled reserves, you're looking for the lowest or one of the lowest adequate funding levels, which tends to be a little less conservative than if you have all 100 buckets of money full at all times and flush with cash. So when we look at funding strategies, and I know there was a couple questions, one in here about the definition for fully funded for 2026. That's one of the most confusing terms, and we're still working to try to get better definitions in the state level. We've got it very well defined at the national level. So CAI and the international standards define 3 funding goals. You see them on your screen here, going from lowest funding to highest funding. Baseline funding is essentially just keeping the reserves above 0 at all times. Threshold funding is keeping the reserves above a threshold, so something higher than 0. And full funding is essentially having the fully funded balance on hand at all times. Some people call this being 100% funded. It is the most conservative, the highest cost to fund, the most conservative funding goal that you can have. It involves determining the fully funded balance of each item on the schedule, on the reserve schedule. And the fully funded balance on each item for the reserve schedule is essentially the amount of the cost that's used up. So if you have a $100,000 roof, let's say, 10-year life, just to keep the math very simple, in year 3, the fully funded balance would be 30,000 because 3/10 of its life is used up. In year 7, fully funded balance would be 70,000, year 8, 80,000, etc. And you do that with each item. You say, what's the fully funded balance based on the age and cost of each component, and that's the fully funded balance. And if you have the fully funded balance, you have 100% of the fully funded balance, you're considered 100% funded, which again is the most conservative way. I can count on one hand, probably, of all the thousands of associations that we work with that regularly have 100% of the fully funded balance on hand at all times. Essentially, they generally either have set that out as a very conservative goal, or they've brand new and maybe have started funding from the very beginning, but they're very few and far between. So most communities are somewhere between baseline and threshold funding. The statute now requires baseline funding. So the question Nadine asks is, what's your understanding for the definition of fully funded 2026? I think what you're asking there is, what's the definition of a fully funded budget for 2026? And a fully funded budget is different than the fully funded balance, which is well defined. Fully funded budget is not defined anywhere, although I would assume that means, anecdotally, we talk about a budget that doesn't need to be waived. And so for the 2026 budget to be, not require any waivers, we'd have a minimum of the SIRS reserves reflecting the most recent SIRS report. So whatever the recommended contribution to reserves for 2026 in the report is what the budget should have. For non-SIRS reserves, the administrative code simply says that the reserve has to be sufficient so that the inflows don't exceed the outflows, essentially baseline funding. The statute also, 913, the House Bill 913 included the term baseline funding, and that's kind of the minimum level. So as long as we're using baseline funding as a goal and we're funding the reserves to achieve that goal as baseline, then I think our budget is adequately funded. I'm not going to say fully funded, it's adequately funded, and will not require any votes to partially fund or waive the reserves. Hopefully that is not too confusing, but I know it's a very confusing term. I've heard about 3 or 4 different definitions of fully funded, and I think it's important to talk about them as goals. And I think the full funding, that goal of having 100% of the fully funded balance, is how we define fully funding, and that's, I think, a very conservative and probably overkill in most cases, because you're not needing all of that money on hand at any one time. But there is a little bit of a, it's the lowest risk level because we've got everything covered as if it was, funded from day one on an individual component basis. But it's the most expensive to fund. So most of our associations, like I said, are leaning towards the baseline funding, although we are pretty successful in helping people see the benefit of having a slight threshold in their reserves, a little bit of a cushion, because again, costs do vary from our estimates, as good as we like to be with our estimates. This is just an example, a case study. This particular community was spending about $1.5 million over 30 years. Sorry, they had to contribute about $1.5 million over 30 years. You can see the blue lines here are the expenses over the next 30 years. Some years there's nothing really being spent. Other years they got $250,000 being spent in some of these bigger years. So you can see how that balance, then this purple line kind of goes up and down, touches 0 here in 2051, but never goes below 0. So this model is the baseline funding goal for this example. It resulted in $49,000 a year, $132 per owner. Take that exact same information and build in a threshold, and it went up about $9 per owner. To $141 an owner. And you'll see in 2051, instead of going all the way down to 0, the reserves have about a little over $100,000 as a cushion in there, which, when you're spending, $250,000 and maybe over the course of this year, $500,000, having a threshold of $100,000 made a lot of sense, especially at a cost of $9 a year per owner. But then the same exact schedule going to full funding, going to 100% funding on the right hand y-axis here, you'll see the percent funded, and you'll see this orange line. So it kind of comes up towards 80% funded, and it really gets up to 100% funded towards the end of the study. But the balance, you'll see, never really gets, it just goes and goes and goes. It goes up to $1 million and dips down just under $1 million, then goes up to 1.2 million. Hard to justify this, I think, to say why would we need that many dollars on hand at any one point. Certainly, it's a conservative goal, but it was a much larger contribution amount, $213 per unit, instead of the other ones were 141, I think was the threshold amount. So most communities, again, are going with more of a threshold model, but there are these three models. And I think it's important to discuss this with your reserve study provider, especially if you're doing the SIRS, because you're going to be obligated to fund what the SIRS says. And if the SIRS is using this more conservative goal and saying that you got to contribute $213 per owner, then that's what you have to contribute. What's considered completion of a SIRS? And then we'll get over to questions. I think I just have a couple more slides. Completion of a SIRS is really when the provider signs and seals the report. Reserve providers, engineers, architects don't sign reports and then ask the board to approve them or sign off on them to complete it. It's complete when they put their stamp on it. You can certainly get an opinion. Most firms will allow for some revisions or changes, discussions. There's lots of estimates. There's lots of assumptions that are made. Sometimes more information comes available and changes are needed, and they should be made. But don't. If you're a board that says, well, we got a SIRS and we didn't agree with it, so it's not complete. I think you're potentially setting yourself up for some issues there. And I would love others' opinion on that, but that's kind of my opinion, is that once we give our opinion, that is a complete SIRS, but certainly you're open to get a second study. Felix popped in. If we repeat a study, can we use the lower of the two? So the statute says that you must use the most recent version, the most recent structural integrity reserve study. So if you go out for that second opinion and the second opinion is worse than the first or higher than the first, I think that's actually the one that you have to be stuck with. This happened to one of our clients. Excuse me. Happened to one of our customers. They didn't agree with the amounts that we were estimating for roof. We had very good data that showed that the roof's costs had gone up a lot since they had done it 5 years ago. And they couldn't agree with it. So they went and got a second opinion. The other engineer was on the higher side. So it was kind of further off than we were. And they came back to us and said, no, we want to use your numbers now. We want to use the lower of the two, is what you're asking, Felix. The answer was no, it's the most recent one. Now we could do an update. In that case, we did kind of update our report. It had been a year, so we did a little update, updated the balances, updated a few other things, and then our report became the most recent, and they were able to use it. So that's not that I want to encourage this opinion shopping. I don't think that's healthy, but you have to kind of be careful when you're out there getting second opinions, and just make sure you're using trusted advisors to give you that information. Well, we talked about this a little bit already. The state law requires 10 years, national suggests 3 years, but there's three kind of cases now that would trigger it sooner than 10 years. One, a pause for the purposes of funding repairs by a milestone. The second one being the SIRS was performed before the association approved a special assessment or a line of credit or a loan, so that changes the funding, or if the budget does not align with the most recent SIRS. So those all would trigger the need for an update sooner than the 10-year mandate. Sorry, Peggy, you've had your hand up, and I've just been rambling on. You want to jump in with a question?
Yeah, I'm just wondering, is the state holding any of the attorneys, community association attorneys responsible for helping the condominiums comply or assist in any way?
Yes, yeah. So the state has quite a bit of resources that they're putting out. I put one in the chat. I want to put another one that just came out yesterday. It's hot off the presses. Um, Let me just copy and put it in the chat here. This is a budgets and reserves training, 80 plus pages of information on how to take your SIRS and implement that. That website has a ton of frequently asked questions, and they also are holding regular education sessions. So you can go to the DBPR Division of Condominiums, Timeshares, and Mobile Homes, and you can look up their events that they're teaching at, or you can even request a presentation for your association to educate yourself on that. They are, I think, trying to help where they can. Of course, there's limitation to how much resources they have to do, and they are receiving continual complaints as well, and so they're dealing with those at the same time as well.
Well, I guess what I'm getting at to follow up is that, let's say they, like, some of them haven't done anything right now. Are their association attorneys responsible to the state if they represent an association that hasn't completed their SIRS? Are they held responsible for assistance, or is that any part of the law at all?
Sorry, is who held responsible, Peggy?
The community attorney.
That's a good question. I'm sure there's ethical responsibilities for that. I don't know what they are. I'd be talking out of school to try to answer that. That's a good question for Jane to see what the obligations are. I know you can file, just like an engineer. If I do malpractice as an engineer, you can file against the Department of Florida Board of Professional Engineers. You could file a complaint against my license, and I'm assuming the same would be the case with the Florida Bar, that you could file a complaint for that attorney giving that advice. But I don't.
But they're
I don't
not
know if the
required.
state would necessarily get involved.
Excuse me, I'm sorry.
Well, I think no, I mean, I think they have. I think they do have an ethical obligation. But I'm not sure what the penalties are for that, or how that exactly would happen if an attorney was not giving good advice.
Okay, so what I'm getting at is there a part of the law that requires the association attorney to assist to move this along, to make sure they're in compliance, not teach them and educate them and all that? Do their community association attorney have to do certain steps to help them get this done?
I'm not aware of any law that requires that. No, I'm not aware of any law that requires an association to hire a community association attorney.
Okay.
Right. Managers have an obligation, right? If they have a manager, the manager has the obligation to follow the law as well. And similarly there, if a manager was giving bad advice, you could file a complaint there. But I don't know, and that the division might look into. But as far as attorneys go, I don't know that the division gets involved, if that's all handled through the Florida Bar, to be honest.
Okay, thanks.
Yeah, absolutely. So this last slide, I think, is just benefits of having the reserves. We talked about this a little bit, just having, avoiding surprises, taking care of items as they come up, and ultimately reducing the cost of ownership and protecting the values of everyone's units. So thank you. There's a little QR code here if you'd like some more information. I'm going to just jump into more questions here. I may go back on the slides, but I'll leave that up for now. So we got a bunch of questions. We'll do like a rapid fire here, and then we can sign off here, and maybe a little bit early. Heidi, sorry, asks, could you please confirm the useful life applied to structural members in the SIRS, and whether the SIRS report is required to include maintenance costs? The useful life applied to structural members in the SIRS is going to be specific to your property, going to be specific to your conditions, what materials you have. That's going to be up to the engineer to determine. That's why you hire a professional to do that SIRS. So they will tell you the useful life of the structural members. Again, Most structural members would not be replaced in their entirety, but would be looking at something like repairs on some cycle. So that's going to be up to the engineer or reserve specialist that does your SIRS. And then the second question, whether the SIRS report is required to include maintenance costs. No, it is not required to include maintenance costs, but it may include costs for maintenance in lieu of total replacement, which is one of the clarifications on one of the laws that passed recently. Also, can you please confirm whether association can waive SIRS even though it is mandated by statute? I'm assuming this question came in before we covered that. There are really just only two cases. One being if the association is focused on milestone repairs and they can pause funding for the purposes of funding milestone work. And the other would be if they're essentially waiving the regular assessments in favor of a loan or a line of credit. Those would be the only two ways to kind of waive SIRS reserves, and both would require majority of the unit owners to approve that as well, and come with some limitations and consequences. So I wouldn't recommend it, but those are kind of the two outs that the legislature has given us on these two SIRS reserves. And ELSS items, which ELSS stands for Engineered Life Safety Systems, items be included in a SIRS. So yes, in fact, they should be included because they're part of the fire proofing and fire protection systems generally. And can you confirm which items are considered under the electrical system for SIRS? Again, that's going to be up to your particular specific building. The engineer would determine that after conducting their inspection of the property, determine what components in the electrical systems would be in there. I can tell you generally things like emergency generators, main transfer switches and panels are included a lot of times in the SIRS, but a lot of it depends on what's common or not, the age of the system, the manufacturer of the system. There's a lot of variables in there. So Haiti, you can't answer that too specifically, but hopefully that points you a little bit in the right direction. I would, these questions, I don't know your role with the association, but these should be asked of the provider that you use to do your SIRS and see what they included there. Dominic, is it best to get a GC to recommend the proper way to get the painting done properly due to repairs? General contractor is the question. No, I would strongly recommend a third-party engineer to write the specification and best practice and manual for the project. Third party, not the person doing the work. Another question from Dominic. Where do you get the affidavit to sign in order to send this to the DBPR? Where are the affidavits found? So there is no requirement to send an affidavit to the DBPR. I'm sorry if that was confusing. The affidavit is for a board or officer to sign to keep on their file, to keep in your records. And I have a sample I can send you if anybody wants to email me. I can send you just a sample template affidavit. The state is going to be coming out with one, but they have not yet from what I've seen. So there isn't, but it really is just a statement again that you keep on your file, and it can be a very kind of basic one pager. And I will send you that copy if you want to email me. I'll put my email in the response to this one so you have it. And I know
Matt,
Peggy
can
will
I
send out
ask, is this something they would put on their website, and it should be for what, 7 years?
Probably a better question for attorney on what the responsibility for that is.
Okay.
It is an association document. I'm not sure that it needs to be on the website or not off the top of my head.
Thank you.
Julie asked, do condo associations have to reserve funds in a SIRS and then a non-SIRS account? Yes. Now, do they have to be separate cash accounts? No, they can be commingled for asset purposes, but they do have to be called out separately on your balance sheet because you're going to have certain items like paving that's going to be non-SIRS, and you're going to have other items that are SIRS, and the two shall not cross. Again, you can vote to move non-SIRS into SIRS, but you can never vote to move SIRS out of SIRS, and you can never spend a SIRS dollar on a non-SIRS item. And so the only way to ensure that you're doing that is to keep a separate accounting of those two accounts. But I have heard, the best practice would be to have two separate bank accounts, but that is not statutory. You can mingle the bank accounts as long as you're keeping an accounting on your liabilities separate. Dominic, should pools be considered a reserve item? Yeah, in fact, I'm sure we're talking swimming pools there. We sometimes get confused ourselves when we're talking about pooled reserves or not. But yeah, swimming pools probably have many reserve items attached to them, including the finish, the deck, the mechanical equipment, the fence around the pool, the restrooms in the pool. There may be several reserve items, not just one for your swimming pool. So good question. Stacy, emergency backup generators, question mark. I have one for the elevator in the event of a power loss during hurricane season. Some border summers should not be included in the SIRS required reserves. Personally think it should. Be interested in your thoughts, and if that should be included, it's probably a 25K replacement. Yeah, I would put it in there. I do think that when you're talking about your electrical systems is one of the items that's listed. I think the generator figures is really part of that electrical system. I can see an argument that it's not, because it's not necessary, mandated there, but my opinion would be include it. But I'm sure you could have on another engineer that would have a different opinion. We're kind of like attorneys that way. Sometimes we don't always agree exactly. And Stacy, it doesn't matter personally what you think or what your board thinks. It depends what the reserve provider thinks, and that's what you're going to have to follow. So personally, I would say, yeah, I would agree with you. I think that it should be included as a structural integrity item. Lisa, how do I find my association on that site again, please? So if you go to, I think the site you're talking about is the condos.myfloridalicense.com. And let me see if I can do this in real time as well. If I put it here, Peggy, do you see this, the screen? Did the screen change? Or are you still looking at the barcode?
Yes. No, the screen's changing. You have the DBPR.
The change. Okay.
Condominium.
DBPR website. Yeah. So this is, again, condos.myfloridalicense.com. And this is for Lisa's question, just how do we find your association, if your association is on the site? Go to the bottom of the, just about to the bottom of the page. It says SIRS reporting database. And you can click view SIRS reporting database. And there's two databases. There's SIRS submitted prior to July 25 and after July 25. They changed their database. So classic, two different, couldn't make it easy on us, but you can check both. Just click on the one submitted prior to 2025. Is the new tab, there's a new tab opening up there. Oh. Of course, it's not going to work while I'm trying to do it live here.
Murphy's Law.
Yeah.
There you go.
Yeah, exactly. Is it? Oh, it's just taking a minute to load. Okay. There's a lot of names. There's thousands and thousands of associations here, and there's tutorial on how to use the SIRS database here. But you can type in your question here, and you can say, beach, whatever your association name is, Avalon Beach Club, and you see, yep, it's on there. That's going to be there. So that's how you search it. You just search project name, association name, city. There's not all the information is visible to everyone, but you can see if it was done or not with those links. So again, that's condos.myfloridalicense.com, and then clicking the view the SIRS reporting database will take you to the actual DBPR page where those databases are there. You can see over here, there's another link to this as well. A lot of information here, SIRS database and SIRS reporting here as well. So a lot of information there for people to benefit from. Condos.myfloridalicense.com. And I recommend bookmarking it. Like I said, they're updating it for pretty regularly. So a lot of good information on there. Becky, what's your experience on having SIRS reviewed and redone the cost? I think you're asking me to give you a proposal to do an updated SIRS, which I can't do. I don't know anything about your property. So the costs, all costs of SIRS, I can say generally are going to be based on the size and complexity of the property, which is going to impact the time that the team, the engineering team, or the reserve specialist team spends on the project. This is not something where you want to just shop the cheapest costs, I will say. A lot of times you get what you pay for, and we've had a lot of cases where people are unhappy with the results, and unhappy with really the ability to implement the findings because there's a lack of confidence in the report. Also, if you're just looking at the SIRS and not looking at the other side of the equation, that can lead to confusion and inaccurate starting points, starting balances, etc. And so that's what I do now. Generally, I will say an updating a SIRS or reviewing a SIRS is going to be less expensive than the initial SIRS. I can say that in general, but I can't. If you'd like an estimate, Becky, we'd be happy to, or anyone on the call, if you'd like an estimate, I'd be happy to provide one for you. No cost or obligation. I just need to learn a little bit about the property and what's been done first, so that we can give you a realistic time estimate and cost for that work. Some of the board think they need to hold on to the reserves but want to borrow instead. Okay, and I think this was the question about, should we use the reserves or the loan money first? I think this is the same person, Batya, but that's fine, and I think that is okay to hold on to the reserve funds, but you're going to just keep in mind you're going to be paying interest on the borrowed funds instead. Edwin asks, can you use reserves for smaller, unexpected repairs to covered items, or is it only meant to be planned for renovations from the reserve study? Generally, again, I'll go back to that statute that said the reserves can only be used for their authorized purpose. So if your reserve, I get this question a lot, when we had a roof leak, we've replaced a piece of flashing on the roof and one section of it. Can we use our roof reserves for it? And I'll go back and I say, well, no, the roof reserve was for replacement of the entire roof. I think if you could make an argument if the repair that you did is going to extend the life of the entire roof, but repairing one area of a leak is not going to impact the other 99.9% of the roof area. So generally, no. Now you could have a reserve line item for repairs. And you could fund your reserve if you wanted to. You could say, well, we're putting money in for repairs, so that's authorized use of those reserves is for repairs. But generally, reserves are for two things: expenditures, which is capital expenditures with the replacement of an item that has a useful life of more than a year, or deferred maintenance, which is repair of an item that happens less frequently than 1 year. And again, you can only use the funds for what it's set aside for initially. So hopefully that helps, Edwin. Just to reaffirm, the reserves must be used for structural expenses over 25K and cannot be waived. Only non-structural items can be waived by over 50% of the ownership. I'm gonna say yes to that. I think what you didn't mean reserves must be used, but reserves must be funded for structural expenses. Not just structural expenses over 25K, but all of the items listed and any item over 25K. So again, back to the question, well, if the door is $10,000, can that be left out? No, it can't, because it's called out specifically. But the last bullet says any other item over 10,000, or now 25,000. Sorry, it's going to take me a while to change that. Any other item over 25,000 cannot be waived. And then yes, non-structural items can be waived by over 50% of the ownership. So that's correct, Batya. Thanks for the questions. Jack, how do I get a copy of the slides? They'll be coming with the post presentation information. Some projects, like a roof, may be better to be done all at once instead of bits of repair. Even if a roof has another 7 years on it, the partial repair will not necessarily resolve the deeper issues. How do you handle that in terms of the funding of the SIRS? Boy, good questions. It's a little specific here, but I guess so. If the roof has another 7 years on it, then I would budget for replacement of the roof at 7 years. Maybe I'm not reading far enough into this question. Repairs that would be needed in the interim should be funded as normal operating maintenance. How do you handle that in terms of funding the SIRS? So now if and maybe I'm not quite exactly sure what you're getting at here, Batya, but if you're saying that the roof is not going to last 7 years because of some underlying issues, then it probably makes sense we can add a line item in the near term to resolve the underlying issues and saying we're going to do a repair in year 2 or 1, and then we're going to do replacement in year 7. That would be acceptable. Or we're going to say, you know what, that repair in year 2 isn't going to resolve the deeper issue, and we need to just replace the roof in year 2 instead. So those are both options that we would have, and it would really depend on the conditions of the roof and costs and logistics and a lot of factors that would be impossible for us to answer today. But appreciate the question. Next question. So if we have 8 components with EOL, which I assume means end of life 2025. Would we need the full amount in reserves to complete the work in 2026? Maybe I'm missing something, but no, if the components had their end of life in 2025, the amount should have been funded in 2025. If you waived the funding in 2025 and you did not replace the component in 2025, then I would say you need to have the full amount to complete the work in 2026. But if you replace them in 2025, then the useful life would reset. I'm sorry, Nadine, I can't follow your question. If you could clarify if you replaced that item in 2025 or not, I might be able to answer it more specifically. All right, Batya, another question. If you pause for a milestone, do you have to include the SIRS in that year's budget? I think yes. I'm sorry, the question's not very clear. So if you're pausing funding for the milestone, the requirement there, again, I'll have to refer right back to this statute here. Oops. Here's the pause language specifically. If an association has completed a milestone inspection pursuant to 553 within the previous 2 calendar years, the board, upon approval of majority voting interests of the association, may temporarily pause for a period of no more than 2 consecutive annual budgets to reserve fund contributions or reduce the amount of reserve funding for the purpose of funding repairs recommended by the milestone inspection. It goes on to say, an association that has paused reserve contributions under this subparagraph must have a structural integrity reserve study performed before the continuation of reserve contributions in order to determine the association's reserve funding needs and to recommend a reserve funding plan. So if that might be your question there, is do we have to do an updated SIRS if we paused for milestone work? And the answer would be yes, but you can pause for a period of no more than 2 consecutive annual budgets, but then before you pick before the continuation of reserve contributions, you would need to do the updated structural integrity reserve study. So, Batya, I guess it depends if you plan on pausing again next year, whether you need to do that SIRS this year or if you can wait until next year. Okay, Dominic says, my understanding is the recommendation is to have a checking account for items to be repaired that are less than 25K. Yeah, so items that, and you can still reserve for items that are less than 25K. A lot of our associations are sticking with that 10,000. Some have always used 3,000, 5,000 as the threshold that says anything or under that amount, we're going to be handling as normal operating maintenance, and that should be coming from your general maintenance reserves. And as far as a checking account, yeah, that's fine. You really should have a budgeted general maintenance at your reserve budget that should come from. But the cash account that would come from might be a checking. Thank you, Dominic. Anonymous, I missed the response somehow to Stacy Witherak's question. Can you repeat your response just to SIRS? I'm gonna have to go back and find Stacy Witherak's question. So windows were historically considered a unit owner's responsibility in our building, and the common area windows were all the COA handled. Can that still be done? Excuse me. Or are we now as COA handling windows regardless? No, the only SIRS funding is required for common area windows, not for unit owner windows. So that's the first part of that question. The second part was they were told that because the doors were not 10K individually, they were not necessarily in the study as they could be replaced individually. I disagreed with that opinion and felt that because the doors are called out specifically in the statute, the specific dollar amount doesn't matter. If it was an item that wasn't specifically called out but fell under that paragraph H that says anything else over 25,000, then that's where that threshold applies, but not to the items that are specifically listed in the statute. Pat asks, can we use reserve funds to pay the income taxes generated on the reserve savings? Boy, I wish Nicole was here for this one because this is one of her issues, and I'll defer to her on that. I unfortunately I don't think you can. I think the funds the interest because it says something like the reserves and all interest occurring thereon must remain in the reserve accounts, can only be spent on their authorized purposes. Taxes is not considered one of their authorized purposes, so most are paying the income taxes through operating, but then there's some accounts say there's a credit back to the reserves for that. But nonetheless, sorry, that's an accounting question. I'm not an accountant, can't answer that one specifically. Sorry. Slides will be sent. Yes. Batya, they think the roof will deteriorate over the 7 years with partial repairs. They means the board. So the board thinks the roof will deteriorate over 7 years with partial repairs. So budget to replace it in 7 years and fund the repairs as operating maintenance. Thank you, Nadine, for clarifying that. Yeah, so the previous board, they did not replace the item. So, and this is a common occurrence. So you've got items that were scheduled to be replaced in 2025, didn't replace them, either they didn't need to be replaced or we just didn't get around to replacing them. So what do we do? Yeah, I would, in most cases, without knowing anything else, I'd say, well, they probably still need to be replaced in 2026. So I would complete them this year, and that was the answer to the question. There are cases where you say, wasn't done in 2025. We look at it, maybe it's good until 2027. We could push it out 2 years, and go from there. So that's that all part of that kind of update, and we're reasoning to update the study when we can. All right, we're just about wrapped here. Last question from Paul. Can you briefly touch on investing reserve funds? Is it limited to certain types of investments? This is great. I was just on a webinar this morning with an investment advisor. There is other options for investing for associations, but and the statute's relatively silent on it. There was a bunch of proposed language that did not find its way into the statute. Essentially, the statute allows investments in certain institutions, and I was just going to go look that up because I don't have it right in front of me. That's one I don't have flagged, or I lost my flag on that one. But essentially, it says the board can invest in CDs, money markets, and other insured, FDIC insured accounts without the vote of the owners, and that's what it says. So does that imply that to invest in other items may require a vote of the owners? That's some debate has come around that item, but no. The main thing, I guess, at a high level, Paul, there's kind of three considerations when it comes to investing reserves. First and foremost, you have to protect the principal. That has to be the first requirement. We can't put this in a risky account. Secondly, it has to be available when we need it. So liquidity is the kind of the second priority, and the third priority is rate. So in that order. So protect the principal, make sure it's liquid, and then we can get rate after that. There's CAI has a great book, who was the author of which I was presenting with this morning, called Investing Reserves, and there's some sample investment policies in there and best practices. Strongly recommend that if you're looking for some guidance on investments. I'm not an investment advisor, but happy to refer some if need be, folks. Thanks for the question. Okay, Glenn got one more in. We got another time for one more, Peggy?
We do, and then I'll
All right,
close.
this will be the last one. Very
Thank-
good. Very good. Well, Glenn's trying to sneak another one in at the last minute here. Okay, so his question is: we have 7 docks in our reserve schedule. We have to replace one this year at a cost of $10,000, and don't have that amount in operating maintenance funds. Can we use reserves to pay for this replacement? Assuming that you have a reserve for dock replacement, yes. If you don't have reserves for dock replacement, no, you can't use those funds, with the exception that you could get an owner vote to use other reserves for the dock replacements, but it would require a majority of the voting interest to approve that in advance. And then any recommendation about segregating structural and non-structural funds? Yes, it's all going to depend on the amount. So we have to segregate the funds. I think that was clear earlier. We can't spend SIRS money on non-SIRS items, so we have to have a segregation. And as far as if you have a pool of money right now, it really depends on what expenses you're foreseeing in each category to determine how much of that pool should go to structural versus non-structural. When we looked at that big sample size of about 1,000 associations, roughly 2/3 went to structural, 1/3 went to non-structural, but that could be completely the opposite or 100% one way or the other, depending on where the next expense is. Because if you have a really big elevator project that's non-structural happening in the next year, you may want all that money to go towards that project, versus if you had a really big concrete restoration project and nothing on the non-structural side, you'd want the money on that side. So it's case by case, Glenn. We're happy to, when we do a SIRS, we give a recommendation on the optimal split of any existing funds of how much should go into each fund as a starting point. Great questions, and thank you. Again, apologize on Jane's behalf that to take the questions, but I know there's someone here that she'll be able to chime in on us. And I think, Peggy, I'll turn it back over to you to close out. Thank you. So let me stop sharing. There we go.
Wow.
I think you're
A
muted,
lot of
Peggy.
information. A lot of information. Thank you so much. That was just an awesome presentation. That's why I wanted to book you when possibly the out-of-town board members were here. So I can't thank you enough. I also want to thank the board members who got on, and I know you're volunteers, but it's really great that you're getting on and you're getting this education, because this is complicated. Thank you to the CAMs. I want to thank you guys also, and please remember to allow about 10 days to get your credit posted to the DBPR. Matt will diligently get those posted for you. I don't want to be remiss in thanking Julia from Vinteum. She does a lot of work behind the scenes, and I really appreciate it more than you know. With that, I want to also mention some upcoming classes and expos. February is a very active month. Starting with February 3rd, there is a HOA and condo board expo in Broward County. You might want to attend at the convention center. Then I have coming on the Friday, first week of February, Socotech Engineering. They're going to be coming. They're going to speak on to help you know when you need an engineer. So that's going to be very interesting. I've never seen that class, but it sounded interesting. So I definitely wanted to get it on, so everybody may learn something about when you need an engineer. The following week, I have a class by First Citizens. That's going to be on the 10th of February. Then on February 13th, we've got the new Construction Summit giving a talk. We haven't got that finalized yet, but we are going to have some interesting information related to construction, and hopefully we'll have a construction defect attorney on that class. The following week on February 20th, that's a Friday, we have Altieri returning to talk about the adjuster's side of the insurance business. I know it seems a little bit far out, but hurricane season is going to be here before you know it. So bring your questions regarding anything to do with hurricane claims and so on. On the 24th of February, we just added this yesterday, Vinteum Software is going to make a presentation. They're going to do an introduction on websites, and they're also going to do a demo training. So we're really excited about that. And then February 10th, I want to mention also is another expo, HOA Expo. For those of you that are in Palm Beach County, it's going to be at the Palm Beach Convention Center. And the last thing I have planned so far is I have Karen's Engineering coming in on February 27th, and they are going to also give a really nice presentation for you. So there's much more planned. I appreciate everybody coming today. I want to thank the sponsors. They will be on the sponsor sheet that's going out with the slides and the recording. I also want to thank you guys one more time for choosing our webinars. So thank you so much. Have a great month. See you soon.